All right, welcome to the Monday edition of the On the Tape podcast. I am Dan Nathan, joined by Guy Adami. Guy, how are you?
Well, how are you?
I'm doing great. You and I have a lot to cover here. Obviously, the news yesterday of Biden dropping out of the race. We're going to hit some earnings. We're going to hit a whole host of things of like maybe the Trump trade coming unwound a little bit. So a lot to talk about. But after that conversation, stick around. Guy had a great conversation with Jonathan Litt. He is the founder and CIO of Land and Buildings. You guys talked about commercial real estate. Jonathan's been on Fast Money with us before. I know you were excited for that conversation to basically take the temperature of commercial real estate here in the U.S., and there's none other better than Jonathan Litt to do that.
No question. He gets pretty granular. He's got his finger on the pulse. So that was pretty cool speaking to him.
All right, let's talk about this. So Biden drops out of the race. You know, it's interesting. I think you had been saying for the latter part of 2023 that this is something was going to happen. I think you suspected it would happen in the early part of 2024. You know, my view clearly was in line with that. I don't know about the timing, but I remember having a conversation on a podcast, not ours, basically saying in February or mid-February that the Dems are whistling past the graveyard with this ticket. You know, without us getting into the politics of it, you know, there's been a lot of talk. If you just pull up the Wall Street Journal or any other financial-oriented Bloomberg or whatever, CNBC, you know, they're talking about the certainty that kind of existed in the market over the last couple of weeks, really since that debate that Trump was going to win election in November. And there were certain trades that folks were calling the Trump trade, again, looking for lower taxes, higher regulation. When you see this, we're like Monday right near the opening. Are those coming unwound, Guy?
As counterintuitive as it might sound, and again, you know, I am not at all interested in politics, and this is in no way political, but you would think a second term for former President Trump would be bullish overall for the market, and it might still be. But what I've said for a while is it's going to be negative for technology, and I think you would probably agree with that, just given some of the rhetoric. And I think then with J.D. Vance being on that ticket as well, some of the protectionist things that we put in place, again, theoretically could sort of hamstring or create some significant headwinds for these big cap technology stocks. And if you look last week when the odds of, again, candidate Trump getting reelected, those stocks did pretty poorly. And I think what you're seeing, at least this morning, and again, we're doing this on Monday morning, is some thought that, you know, maybe the pendulum has swung a little bit and maybe Kamala Harris has a better chance of defeating, again, former President Trump in this general election in November. So I think it's unwinding a little bit. Again, there's a lot of time left, but I think on the margins, that's probably what we're seeing. But obviously, the last couple of weekends have thrown some significant curveballs to the market participants for sure.
Yeah, no doubt. And, you know, one of the things that you mentioned about maybe a headwind to tech, if let's say the Dem ticket was strong and came back to kind of beat President Trump, although it's not polling yet because we don't know what that ticket looks like. You know, Kamala being from California, she was a DA in San Francisco. She was the AG of California. Then she was obviously one of two senators from California. You know, one of the big stories over the last few weeks, which you know very well, is all of these tech folks, whether they be, you know, VCs or just prominent voices out there, kind of falling in line and actually, I think almost crossing the line, if you will, you know, following Trump because of the extreme regulation that we've seen. And let's be clear, I mean, this was something under the Trump administration, you would agree, that was pretty hostile towards large tech. So I wonder if she is the nominee, if she kind of makes an appeal again to tech. The problem is the FTC, right, that we've seen Lena Khan be very aggressive with technology. And if regulation is a really important part of this, then you are exactly right. So let's see who the ticket is and what their approach is towards tech. But, you know,
and I'll just add this real quick, yeah. and you're right about that domestically. But again, if you listen, and this broke on Fast Money, I think Tuesday of last week. So forgive me if I'm wrong, but you know, that interview that, again, candidate former President Trump did with Bloomberg. And, you know, one of the things that really struck me was his seemingly, I don't want to say glib stance, but his interesting stance on what a China-Taiwan situation would look like and what our potential response would be. And, you know, I think the market views China-Taiwan as some sort of existential risk to not only the broader market specifically in general, but technology very specifically. And I think that listen, some of the sell-off we saw last week, I think, was predicated maybe on some of those commentaries, which again can be ratcheted back or changed, but I think that was part of it as well.
Yeah, and one story that, a lot of folks have not been talking about is just the weakness in China. We had some GDP data, I think a couple weeks ago, the lowest reading in a very long time. There's an article in the Wall Street Journal from like a week ago, and we'll put it in the show notes. Trillions in hidden debt drove China's growth. Now it threatens its future. They are talking about local governments racked up as much as 11 trillion in off the books debt to build industrial districts, resorts, transit systems, and housing projects, including many that failed. And it's just pretty fascinating. People have been talking about this China debt bomb that ultimately might explode at some point. And you've made this case that, again, that could be the very thing that causes China to kind of move on Taiwan. Thoughts there, Guy? Because, again, a weak China is not great for global growth.
No, and listen, their monetary policy is such, and I think we saw some things overnight, where they're going to do what they can to support their market. But to your point about these numbers, I mean, they're staggering when you really think about it. And listen, you go back 4 or 5 or so years ago, pre-COVID, everything in our market seemingly was predicated on China and the China growth trade. I mean, I can remember talking about it seemingly every night on Fast Money. And now here we are, we're sort of on the other side of that. And that China growth trade, well, the growth really isn't there. And one has to wonder, if the market, at least our domestic market in large part was predicated on that to the upside, what does it mean if things sort of go pear-shaped there? So to discount China entirely, and I'm not suggesting you're doing this, but though I think a large extent, people use what they can use when it serves a narrative to the upside. And if it doesn't serve it to the downside, they sort of discount it. I mean, I think it's just foolish. You have to take that into consideration. And there are a lot of things happening there. And to your point about, when somebody or people are cornered, a lot of times they lash out. And if China is in fact cornered in terms of their economy, what is the lash out going to look like? And, I've thought for a while that lash out could look like something in terms of a blockade of Taiwan or maybe something even stronger. So that's on the radar screen as well, especially when, you're into this presidential cycle here in the United States, which started earlier in the year, which is obviously only going to gain in momentum. One has to wonder what the Chinese stance is going to be, as there is, a lot of question marks here in the United States.
Yeah, no doubt. And, sticking with the China situation, Nvidia, there's a story out overnight that they're trying to change some of their high-end AI graphics chips, the existing, the Blackwell B200, and modifying them to kind of get in line with the Biden administration curbs that they have on selling them. And I just want to make 2 points here, Guy. It's pretty interesting to me, and we've talked about this, is that, a lot of maybe the growth that Nvidia had, let's call it in the beginning of 2023, might have been before some of those curbs got in place, double ordering from China to get these chips, right? And now that Nvidia, a company that is dependent on the hyper growth, if you just think of the stock dependent on hyper growth, given the valuation and the like, that for them to be able to kind of sell into China is really important. And then you have to ask yourself, if it is a matter of national security, right, in an AI arms race that we are clearly in with China, why is Nvidia working so hard, right, to modify these chips and sell them into China? You would think that would be something that would be in our national interest not to do. And you made the point on many occasions with Intel getting billions and billions of dollars from, the U.S. government as part of this CHIPS Act, and Global Foundries is getting a lot to build, the fabs here, right, to create the chips here. So we are not dependent on Taiwan and the like. So that's an interesting story to me.
One that's worth watching for sure. I mean, obviously, you point this out all the time. Nvidia reports sort of off cycle, so we're not going to hear from them for probably about 3.5 weeks or so. But that'll be interesting. Again, what I'll focus on there is the margins, but some of the rhetoric around it as well. So keep an eye on Nvidia, and we've pointed this out as well for you people that want to play sort of the armchair technician game, which I try to do as well. I mean, March 8th was a Friday. You saw a huge reversal in that stock that subsequently led to a 24% decline by the middle of April. You saw the same thing on June 20th. And I will tell you that in an S&P 500, until the last few trading days, it's done extraordinarily well. Since June 20th, Nvidia has not participated. You'd be like, okay, it's taking a breather. Yeah, maybe. Or maybe you saw a similar sort of technical formation, and maybe we're on the precipice of something. So a lot of things are winding up and aligning here in the chip sector as well. And, you just throw this curveball again. in the mix, and one has to wonder how it's going to shake out. I'm glad you mentioned Intel. Now, the stock is traded horribly. I mean, you saw a little bit of a bounce recently, but if you're looking for sort of this homeland security play or reshoring play, Intel probably sets up as well as anybody.
Yeah, no doubt. I'm just looking at the markets here, guys. So the reaction to the news yesterday with Biden dropping out, you see the S&P, up maybe 65 basis points. You see gold was up a little bit. Now it's down a little bit. You see a slightly weaker dollar. Do you see any big macro, ramifications as we think about yields? They're basically unchanged. The 10-year is about 4.2, give or take a couple basis points there. Anything on the macro front we should kind of keep our ears and eyes open for?
Yeah, I guess again, we have to get to the convention. Is Vice President Harris, is she sort of anointed? It appears as though any potential candidate or viable person for the office of president seemingly is backing off a little bit. So at least here on Monday morning, it almost appears as if a foregone conclusion is she will get the delegates necessary to be the candidate, the Democratic candidate for president. With that said, there's still a few weeks left and anything can happen. However, all this means to me is, she seems to poll better against former President Trump than Biden did. So maybe on the margins, you'll see a little bit of moving and shaking, but I don't think once the dust settles, it has all that much bearing on sort of the macro scene here in the U.S.
Yeah, no doubt. We also have to talk about the big news from last week. So this huge tech outage, right? So it was not a cyber attack. That's kind of good to know. But there was a single point of failure at CrowdStrike, giving an update for Windows computers. I think it sounds like 8 million of them went down globally. It was an update to, let's say, one of their security systems. And, when you think about this and a single point of failure, the havoc that it wreaked in so many different businesses, around the world, it's pretty interesting. The stock was down 11% on Friday. At one point, it was down a lot more than that, maybe 20% or so. Down a little bit here today, 3-4%. What do you think of when you see those sorts of headlines and you see the sort of vulnerabilities, you see the dependence we have on tech, you think about all the unknowns around generative AI and all these companies that are moving so quickly to adopt this technology? It makes for something that, again, it's like until it almost, needs regulation to some degree, or needs people who understand the potential risks, to kind of be part of this whole process as we adopt this technology. But thoughts, Guy, I guess specifically on the CrowdStrike, this was not, to be very clear, a Microsoft issue, but they had a big PR issue on their hands because it affected their operating systems.
So the optimist, the half full person will say, look, we got through this seemingly unscathed, and the system corrected itself in a relative short period of time, although people are still sort of feeling the impact if you're trying to travel. That's the good side of the equation. The bad side, to your point, is, a single point of contact, and it can take down, it's pretty much a global event. And one has to be concerned that if it were something bigger than that, what are we looking at? So when you can sort of hamstring and put basically a full stop on air travel here in the United States, and things ratchet to a halt, you have to be concerned that if it were something bigger than that, what are we looking at? So my view on this whole thing. I mean, again, I'm not suggesting there was some sort of hack or some sort of breach. However, it speaks to the vulnerability of the system when a software update in the middle of the night can have that type of effect on, global travel, global commerce, global pretty much everything. So yeah, I mean, it's just one more thing to be concerned about in an era of technology where technology drives everything. If there are vulnerabilities out there, I guarantee our adversaries are out there trying right now to infiltrate those vulnerabilities.
All right, so Guy, just real quickly on CrowdStrike, in late 2022, this was a stock that traded $100. I think about a few weeks ago, it nearly kissed $400. It was trading at an all-time high. So here we are. I think the stock in the pre-market is below 290. You think of that sort of move. You think about this stock. It was a darling, right, among the cybersecurity names. Trading at 76 times this year's earnings, 18.5 times sales. It doesn't get much better for 2026 fiscal year. 62 times earnings, about 15 times sales. And, I just kind of say to myself, you know what? There's expected growth of, 50, 60% for this current fiscal year in earnings. That's GAAP earnings, and about 65% next. Revenues are growing, 25% or so. And this is a company that has a very high gross margin at 78. But how does it grow into this valuation? And does this move from 400 down to 300 in a month? Does it present an opportunity in your opinion?
Well, valuations never make sense in this space. I mean, Palo Alto trades at a ridiculous valuation, Zscaler or CrowdStrike. I mean, those are the three that everybody talks about. But, recently, and you talked about it on OK Computer, I'm sure, but, Google's making a foray into that space here, a potential acquisition that they're making into cybersecurity. So how do you trade it? Well, if you can sort of look past the valuation, and now let's look at the technicals. You mentioned, I think the stock traded up to about $398 seemingly a couple of weeks ago. And here we are sub 300, pretty much in a straight line. The prior all-time high in this stock, you have to go all the way back to the fall of 2021. Stock was trading about $285. And as you just said, we're probably going to come in today right around that level. So prior resistance theoretically should become support. And in terms of volume, you're going to probably see a pretty significant volume day. It's a stock that typically trades about 8 million shares a day. My sense is you'll see 4 or 5 times that volume. So, if it sort of holds this sort of 285 level on big volume, I mean, this to me is a stock you want to take a look at. So I understand it was their issue. It was their software update. I get it. But, the space is not going away. And in an odd way, that event sort of illustrates and highlights why cybersecurity stocks are so important in the first place.
Yeah, and I'll just say this about the NASDAQ 100. Since the late April lows, I think that, this index was down, 6, 7% or something like that. Since then, to its highs that it just made about 2 weeks ago is up 21%. So now it's down about 6%. And a stock like Microsoft is down about 7% from its highs, and you think of just kind of its impervious nature that it's had over the last year and a half or so since that OpenAI, investment and the thought that they're in the driver's seat or so, that 200-day moving average in Microsoft is down about 15, 16% from those recent highs. And that could be a name that if you had, a sell-off that was greater than that, than the S&P 500 and the NASDAQ 100, that's probably a name down at that support, $400 or so near that 200-day moving average that could also make some sense.
Mm-hmm. Look, Microsoft, my view on Microsoft. I've said it a number of times on Fast Money, one of the 5, if not 3 most important companies on the planet without question. And in terms of their market cap, they're sort of rewarded like they are, number one. Number two, however, I think fortunately or unfortunately, depending on how you look at it, I mean, the valuation is at levels that historically it doesn't trade at. And obviously it's a couple turns greater than the broader market. And when you start talking about, valuation in stocks and what are we looking at in expected growth, if you see any hiccup at all, if you see any margin compression at all, if you see any perceived slowdown in their cloud business at all, that's when these stocks take a tumble. So it's not an indictment, and we say it all the time, it's not an indictment of the companies, it's an indictment on the valuation. And all of them, ex maybe Google, have gotten themselves pretty expensive in this environment.
Yeah, we're going to hit Google in a second here. They report earnings Tuesday after the close. But really quickly, Guy, I wanted to take a look back at some of the earnings that we saw late last week, specifically as it relates for some of these financial services companies and the U.S. consumer. But I also want to hit the Beige Book that came out late last week also. And I thought this was interesting. Prices increased at a modest pace overall, with a couple of districts noting only slight increase, while consumer spending was generally reported as slowing a little to no change. Almost every district mentioned retailers discounting items of price-sensitive consumers only purchasing essentials, trading down in quality, buying fewer items, or shopping around for the best deals. That's something that I think has been fairly consistent as we've talked about retail. We also talked about, some of the financial services companies that have kind of consumer-facing business. That was what we heard from Citigroup, about retailers, and really they're starting to see a bifurcation of consumers on the higher end and the lower end. And so thoughts on that, Guy, because ultimately, 2/3 of GDP or a little more or so is consumer spending here? And if we were to have, let's say, the housing market, which has definitely cooled a little bit from a prices standpoint, despite, mortgage rates coming down a little bit, or the stock market, let's say, to go down 10% or more, you might see the wealth effect leave the market. And then some of those kind of lower end consumers, which have been dealing with inflation for, years now, really seeing them put their foot on the brake a little bit or tapping.
Well, I'll say this, you try to read the tea leaves and you try to listen to what the retailers have been saying, and they've been saying it for a while. When you listen to the dollar stores, specifically like a Dollar Tree or a Dollar Gen, talking about the trade down that they're seeing from their stores, that should sort of open some eyes, because historically when things slow down, those are the stores that people trade down to. So if they're trading down from, one has to wonder what's going on. And you just said it, people are shopping around, trying to find the best prices, and they're buying just the essentials. I mean, what does that sound like to you? It doesn't sound like a robust consumer to me. Now, you're seeing it in the stocks as well, and you're seeing it across a swath of retailers, both on the high end and the low end. And the ones that are winning seemingly are names like Walmart and Costco and the TJXs of the world, which actually makes a lot of sense. And I think those can continue to work. However, when you start to see it on both sides of the barbell, both the lower and the upper end, you have to start asking yourself a question: what is really going on? And again, when a stock market's at an all-time high, effectively, when you see this administration's approval rating when it comes to the economy at record lows, it doesn't make a lot of sense unless you start to think about it intuitively and say, you know what? The stock market's own animal right now, but on the ground, people are hurting. And regardless of what you hear the pundits say about inflation coming down and slowing, people are still feeling the impact of the cumulative effect of inflation over the last few years. And it's hurting people across a swath of both on the lower end and counterintuitively on the higher end as well. People are being more discerning about what they're buying, and it's manifesting itself in some of these stocks.
Yeah, we talked about Burberry and some of these other luxury retailers.
Lulu, I think, I don't know if they're luxury, but
it's discretionary.
They're sort of on
clearly.
the other end, So
no, that and Nike, and we're going to talk about Starbucks in a second. Also discretionary. But one of the things, Guy, we heard from some of these luxury retailers is a slowdown in the Chinese consumer, and that's been something that has really been powering, I think, on the higher ends, definitely for some of these kind of multinationals in the U.S. And Europe. But I want to read two quotes from two different CFOs that reported earnings last week in the financial services sector. First is from American Express, their CFO, Christophe Lecalec. I think that's French, Guy. I'm not really sure here. While spend growth in certain categories was slightly higher or lower versus the prior quarter, overall spend growth was stable, and we continue to see strong growth in a number of transactions on our card members, which grew 9% this quarter. So we feel the U.S. consumer has been pretty consistent. We think it's going to be pretty consistent throughout the year. I thought that was interesting. This is from the Discover Financial Services CFO, John Green. A little easier name to say, Guy, but it makes some sense here. We continue to see a cautious consumer, evidenced by less card member spend, with lower income households being most affected. So again, those are just highlighting some of the things that you just said. And I just think that, the lower end, I think we're all in agreement. It's really tough. And we keep hearing that from a lot of financial services companies or retailers. I guess the next shoe to drop would be the American Express customer.
Delinquencies were surprisingly good on that DFS report, which surprised me. And I think you actually commented on it last week on Fast Money. Like, if you had asked me a week or so prior, I would have said, you know what, you're going to start to see it in terms of delinquency manifest itself at a name like DFS. It didn't happen. Doesn't mean it's not going to happen, but it didn't happen this past quarter. And American Express as well. I mean, when you think about MasterCard and Visa, which, by the way, since March haven't traded particularly well, those are transaction companies who do not take credit risk. And then you look at the other side of the spectrum, American Express, who does take credit risk in the form of they basically are making loans to their customers, if you think about it. And the rates that they charge, I mean, I think it's probably the average rate on a credit card now is either side of 22%. I just still think you're going to start to see an uptick in delinquencies. And I also think you're going to see more and more banks sort of have these loan loss provisions that surprise people. And what we didn't mention, but it's worth mentioning as well, the pretty look, I want to make a big deal of it at 4.1%, but from 3.4% unemployment to 4.1 on its way, I think north of 4.6, 4.7 over the next, 5 or 6 months, the unemployment rate's going to factor into this as well. So as much as we want to say the health of the consumer, I understand, and I say this all the time, Dan, never underestimate the U.S. consumers want to spend. The question is whether or not they should be. And I think that's what we're going to start hearing more and more about.
Yeah, it's interesting. That was the Fed's intended goal, right? To get unemployment
100%.
up off of like those 50-year lows or whatever. And I'll just, one other point about this is, Guy, we're talking about the knock-on effects of this new sort of Dem ticket, however it shakes off. We're still seeing a very high probability of a September rate cut of 25 basis points. That hasn't moved a whole heck of a lot. I think it's about 95% or so. But depending upon how all this shakes out, that might be something that's seen political, so maybe that comes off the table. So, we'll have to kind of watch out for that a little bit.
Well, whether it's political or not, it's going to be made political 100%. And again, I want to emphasize, I am not interested in politics. I'm really not. It bores the shit out of me. But I'll say this as well. In that Bloomberg interview that, again, candidate former President Trump did, he mentioned, and I'm paraphrasing, that he did not think the Fed should lower rates in September because it would be, in his mind, it's a political move to try to help the current administration, which I don't think is true. But it doesn't matter what I think. That will be the rhetoric around it. So whether or not it's political or not, it will be made political, regardless of how it shakes out.
Yeah, no doubt about that. Again, I don't think it's going to help the consumer one bit either, right?
No.
If you think about it. So that's kind of my take. Real quickly on Starbucks, on Friday, Elliott Management, which is an activist investor, they released the fact that they took a stake. This stock, Guy, was down about 38% or so from its all-time highs made in 2021. It was down about 33% from its 52-week highs. It had nearly a 7% gain on Friday afternoon. It's down a little bit today or so. Elliott obviously has a great track record in affecting change. This is a company that, has had a lot of problems. If you think on the C-suite, we've had Howard Schultz come back in and out and this and that or whatever. But, let's firmly put this in that sort of discretionary camp, because I don't know about you, but every time I buy something at Starbucks, I don't get out of there without a $10 sort of bill or so. And, that's probably something we're seeing in the trade down. We heard it a little bit from McDonald's, from Chipotle, from Domino's. Also, this is all over the last month or so.
All right, real quick, let's just playing the stock market game. If you go back to the summer of 2022, Starbucks traded down to about 71.5-ish or so, and then subsequently spent the next sort of 6 months to a year rallying up to about $115. If you look at the recent low in Starbucks in May, and then subsequently, maybe a week or so ago, we basically got down to about that level again, 71.5. So if you're looking at something to trade against, it comes in the form of potentially this little bit of a double bottom. And again, I don't think the headwinds that have been affecting Starbucks have abated at all, but you can sometimes get these counter trend bounces in stocks. And I think that's what we're on the precipice of now in Starbucks.
All right, let's hit a couple earnings before we get out of here. I just want to kind of give listeners heads up on OK Computer that's going to drop a day early tomorrow morning. I have Gene Munster from Deepwater Asset Management joining me, and we're going to hit all of the mega cap tech stocks, a big rundown of those pre-earnings. So, we're just going to hit a little bit here. Let's talk about Alphabet, the Google guy. The implied move is a little less than 6%. I don't know if you recall, the stock jumped 10% last quarter on better than expected cloud growth. But the quarter before that, it was down 7.5%. The quarter before that, it was down 9.5%. That's when, when they had that really bad Bard, kind of launch there. That's their, that's their generative AI platform, but then they did a lot better with Gemini Advanced. So the sentiment turned there. And again, when you talk about valuation, I think you said, this one is a bit of an outlier relative to, let's say, a Microsoft and an Apple. This year expected GAAP earnings growth of 31%, expected up 14% next year, trades about 24 times this year, 21 times next, with revenue growth expected to be 19% this year, 11% next, with gross margins, Guy, 68%, which basically have been pretty flat over the last few years and expected to tick down next year. Thoughts on Google heading into the print? It's had a massive run of late, but this is a tough one as we try to see, this rotation out of some of these names. I think it's a slightly perilous setup for a lot of these mega cap tech stocks.
Perilous is probably the right word. I mean, I guess if there is any good news, if you're playing it from the long side, I mean, it's off from that 192-ish prior all-time high that we made, I want to say on July 10th or so. So at least it's pulled back a little bit. Not much, I get it. But, valuation, you can wrap your head around it. But you've seen some hiccups in this stock many times over the last couple of years where you've seen seemingly out of nowhere some pretty big moves to the downside. I mean, I'll give you one, for example. It was back, I want to say, Dan, in October of 2023, just last year. The stock went from about 138-ish down to about 120, seemingly in a straight line. It does happen. It happened again, I want to say, in January of this year, 153 down to about, I want to say, 140 or so. A subsequent move by March down to 130. So although the stock just recently made an all-time high, it's not without its pitfalls. So to a certain extent, I think if you're looking to play the stock, you're sort of hoping you see another one of those sell-offs that look scary, but are provided if you have a day or two of a time frame in terms of sort of waiting. This gets pretty interesting pretty quick. So in terms of trading the stock, I'm sort of hoping they say something that disappoints and you're looking to get it back in sort of the 165 or so level, which is not out of the realm of possibility.
Yeah. So let's hit Tesla really quickly. Since that April low, Guy, which is a multi-year low, I think when they announced their Q1 deliveries, Elon Musk, the CEO, also went over to China. He got some sort of assurance that full self-driving was going to be able to be tested in China. Stock had a 90% rally to its recent highs. And I don't think it makes a lot of sense to talk about valuation here. It probably makes most sense to focus on margins, right? And one of the things that's interesting to me with that 8% implied move, the last 2 quarters, the stock has moved 12%. The prior 2 quarters than that, it's moved about 9.5%. So this is a huge mover here. And I just want to make one point about the earnings, which obviously the margins are a big part of that, right? So they've been going down fairly dramatically. This company reported earnings of $3.12 in 2023, $4.07 in 2022. Okay, this is on an adjusted basis. This year they're supposed to do $2.52, and next year $3.32. So don't be fooled by that expected 32% growth, because $3.32 is only 20 cents, Guy, above their 2023 number. And I think that's an important way to look at it, especially as you've seen this price war persist, right? And, this is one of the things I thought was interesting at the RNC, Guy. One of the first things when former President Trump was talking about kind of tariffs and trade wars and stuff like that, he was talking about ending subsidies for U.S. EV companies and then also ratcheting up tariffs on Chinese EVs to the point of 200%. And, China is a huge market, right, for Tesla. They have a huge manufacturing facility in Shanghai. They've relied a bit on that Chinese consumer, but they're really in a price war there. So a lot of headwinds, I think, if you look at quarters out. But that being said, with the rally the stock has had, you got to think that expectations are really high. So this is going to be an interesting one to watch Tuesday afternoon.
Yeah, it's a market sentiment thing to me for sure. If you go back and look, you said basically an 8%, it's called a 10% move. So 10% is $25. I can do that math. To the upside, it'll get you to the levels we traded of July of last year of about 281 if you go back and look. I mean, it was, people forget. I mean, last year, the stock went from 113 in January almost to $300, $282 or so dollars by July. So we've seen moves of this magnitude before. That's a logical place for it to stop if they say something that the market sort of interprets as bullish. And again, it's not lost on me that Elon Musk, I think, and again, he's seemingly going back and forth on this, but I want to say he's pledged $45 million dollars or so
a month.
A month. Is it?
To a super
ridiculous number. So we'll see. I mean, again, so there's a lot of jockeying for position going on as well. And to a certain extent, this could be potentially be a trade that centers around who is seemingly winning over the next couple months in terms of this presidential election in November.
All right, before we get out of here, I just want to hit one more name on the earnings front. I think it reports, this is ServiceNow on Wednesday after the close. And this is a name, that's part of this kind of enterprise software space. We've been talking about the relative underperformance guy of a lot of these names, to anything related to generative AI. And, I think market reaction to this one is going to be really important to me. Expected earnings and sales growth of 20% plus, not just this year, but also next. Trades at a kind of fat, sort of PE. So to me, the stock's up 8% on the year or so. And, again, underperformance. Let's see what sort of market participants think about the guide that they give, because this could be a little bit of a precursor for either a catch up in this space to some of these generative AI names, or kind of confirm some of the underperformance that we've seen over the last year or so.
$150 billion company. I mean, if you look again, in May, went from $780, cascaded down to, I want to say $640 or so, seemingly in a straight line. Then you had the subsequent move right back, if not higher than that prior high. Volatile stock. It's, with a company of this size, it shouldn't be as volatile as it is, but it is. So I don't know how you play it in earnings. I have no idea, but I think volatility is going to rule the day. I think this is another one of those where if you see a dramatic sell-off, it's sort of like close your eyes and take a shot on the long side.
Yeah, again, to me, I think early in an earnings season, Guy, we really got through a lot of financial stocks, but it's sometimes important. Maybe just sit on your hands and you see what the market reaction is to the news, and it might be the sort of thing that you can extrapolate to some of the names, some of the competitors and some of their suppliers and some of their big customers when we talk about CapEx and the like. So that's one that's really interesting to me. All right, Guy, we got Gene Munster on OK Computer on Tuesday, and you had a great conversation with Jonathan Litt, so stick around for that. You can catch Guy and myself on Market Call Tuesday, Wednesday, Thursday on our YouTube channel at 1 p.m. And obviously, every day of the week, you can get Market Matrix. This is an AI-generated podcast. Guy and I and our team, we curate what we think are 10 of the most important stories each day. We bang it into Brunson. What does that mean? Well, he is an AI voice bot. You don't have to listen to us anymore. You can listen to Brunson for Market Matrix. So go follow that in your favorite podcast store. Thanks, Guy.